We've got Maruti Q4 earnings which are flashing on your screen. At least on the bottom line, it's looking like a very good set of earnings, a beat compared to what we were anticipating, 1,284 crore. So this beats our expectations by a good 140 crore. So that's a pretty big jump. It's more than 50% rise that the company has seen in the bottom line. So the only number that we have is profit, and that is looking healthy, a beat compared to street expectations, higher than our poll. We're awaiting what the profit, the margins as well as the sales figure is, but the street was expecting a good set of earnings from Maruti Suzuki because of the yen depreciation, so there were currency tailwinds which would have aided their margins. Maruti, the stock has also done quite well. It's seen a rally of close to about 77% in the last 12 months or so. It's rising, but it's not rapidly moving up, so we'll await more details. For now, the profit figure at 1,284 crore is looking good and a beat compared to street expectations. We thought that the revenues would go up by close to about 10.5% given the 7% volume growth, and margins would rise by 400 basis points because of the currency tailwinds. That's the yen depreciation. The yen is depreciated close to about 4% on a quarter-on-quarter basis. We've got the sales figure 13,273 crore. So that's largely in line with street expectations. Will roughly be a growth of close to about 10-odd%. If you have to quibble over words, it misses our expectations by about 75 odd crores. The stock is largely stable, come off by about 10 basis points from the highs. In a bit, Sonia will also be joining in. Okay, we have her. Sonia, only two numbers with us. What do you make of the sales and profits?
Well, it looks like a good set of numbers, at least on the bottom line. On the top line front, it's largely in line with estimates at about 13,273 crores. But there's generally no surprises there because we get the volume figures well in advance. And this time we know that the volume growth was decent as well. The beat has actually come in on the bottom line. So 1,284 crores is a good jump of almost 50% that we're seeing on a year-on-year basis. This is versus an expectation of around 1,145 odd crores. I'm waiting for the press release to get what the margins are and where the beat has actually come in from. But remember, this time around, a couple of things have worked in favor of Maruti. Okay, the company has also announced a dividend of around 25 rupees per share for shareholders. So that as well is a positive news flow that has come in. And now you can see the stock spiking up some more. But as we await details of the margins, just a couple of things to point out. This time around, the margins are expected to go up to all the way to about 14-odd%. One, because of the currency tailwind, Rima, as we were pointing out, the yen has depreciated and Maruti imports nearly 23% of its raw material in yen terms. So that is a big positive. Second is we've seen raw material costs falling as well, even in the local, in local currency terms. So that as well will be a positive for them. And third is that the product mix is in favor of some of their high-end products like the Ciaz, etc. So that will help them in terms of their overall margin. So I'm just awaiting the details as far as the margin picture is concerned.
The company has given a statement where they say higher volumes, material cost reduction initiatives, favorable foreign exchange and lower sales promotion expense has contributed to the bottom line during the quarter. So that's one statement which is coming out of the company. Sonia, the key numbers that we have, a top line growth of 9.7% and a profit jump of 60% on year-on-year basis. Given that, do you think there is a possibility for margin surprise?
Actually, when they say lower promotional expense, this is interesting because, the company for the last many quarters has been working on a demand push strategy. So they've been giving very high discounts on many of their products. In fact, in the quarter gone by, the discounts were at an all-time high of 21,000 rupees per unit. And most analysts believe that those discounts perhaps have petered off now, and that could result in better margins for them because the incremental volumes that Maruti is seeing has been driven by some of the products that are selling at no discounts at all, like the Ciaz, etc. While we wait by for more details on the margins, let's just go across to an analyst. Bharat Gianani of Angel Broking joins us now. Bharat, the top line growth is largely in line with estimates. It's a growth of 10%, but we just have the bottom line figure, which is a 40%, more than a 40% growth at about 1,284 crores. Your initial comments?
If you see, basically on the top line front, the numbers, as you rightly pointed out, have been in line with what we are estimating. But if you see the net profit figure, that is slightly above our estimates. We were basically expecting a profit of about 1,220 crores. So the company has delivered a profit of 1,284 crores, which is 5% above our estimates. So we really have to see whether it is on account of the operating performance or whether it is due to a surge in the other line items.
Okay. Bharat, just one question. The numbers look good, but the stock isn't racing away. It's up close to about 1.5%. Do you think it's already trading at fair values and is factoring in such good numbers, a profit jump of close to about 60%?
See, as I said, if you see the numbers purely from the earnings perspective, then there has been just a marginal beat, as I earlier pointed out. So it's just 5% above the estimates.
Bharat, just hold on. We're actually getting the numbers now. And the reason why the stock is spiking up is because the margin performance is extremely strong. The EBITDA has come in at 2,155 crores. This is versus an expectation of 1,876 crores. So there is a big bump up that we are seeing in the EBITDA performance at this point, 2,155 crores. That means the margins for the company have come in at 15.8%. That is the reported margins that the company has delivered. And this is a very strong performance. Remember, last quarter, the adjusted margins were at 13.3%. In the previous quarter, it was at 12.4%. And in Q1, it was 11.7%. So consistently, quarter after quarter, Maruti has been delivering as far as margins are concerned. In fact, the poll of 14% was at the slightly higher end. So it's beaten even the higher end estimates of analysts. And as I was suggesting, Rima, the management has made a comment where they're saying that promotional expenses have gone down. So perhaps the discounts for the company have reduced. That could be the only swing factor. Otherwise, we know that the margins have been supported by the way the yen has gotten depreciated. The product mix has improved as well. The only thing we didn't have clarity on was whether the discounting levels continue to be at record highs. But there are some indications from the management that perhaps the discounting levels have come off. So this looks like a very good set of numbers from the company. Bharat, just wanted your comments on this 15.8% margin that the company has delivered.
As we know, as we see, the margins definitely have been above what the street was estimating. The street was estimating a margin of about 14.2%. So, hello.
Yeah, go ahead.
So definitely there has 15.8% looks to be a better number. So purely from an EBITDA perspective, if I see, there has been beat of about 12%. So definitely the margins are better. So the company has performed good on the operating side. And if we analyze the Marutis, this has been the best margin performance in the last 5 years. 15.8% is a record margin in 4 to 5 years. So definitely there has been a beat on the operating side.
Okay. Bharat, considering the profit beat has been driven by a margin outperformance, will you up your EPS estimates for Maruti? And if yes, by how much? And does it also call for a re-rating of the stock?
Yeah, definitely. Given the operating performance has been has beaten the analyst estimates, so definitely there could be an upward revision. But we would wait for interaction with the management and their commentary whether this kind of margin is sustainable going forward.
Okay. Well, there are some comments coming in from the management. In terms of volume growth, they say that they've done a volume growth of 11.9% over the previous year. So that's a very decent volume growth that they've seen. It is about a total of 12,92,000 units during the year. So that's about, they've beaten their guidance of 10% volume growth that they had laid out for, with a 12% volume growth, 11.9% to be precise, for the entire fiscal. Of this, exports have gained about 20.1%. Bharat, what are you factoring in terms of volume growth in FY16, considering that they have a host of new launches that are lined up? This year, they've managed to do about 12%. For FY16, what are you projecting?
See, FY16, we are projecting a volume growth at the similar levels of about 12 to 14%. 12% is what they managed to do in FY15, which is definitely better than the industry growth of about 4%. So the next year projections for the industry stand at about 6 to 7% for the overall passenger vehicle industry, and we expect Maruti to continue to gain market share in the passenger vehicle segment. So our volume projections for FY16 stand at about 12 to 14%.
Okay. Just one more word on the margins itself. You know, this time around there is a cumulative impact of not just yen depreciation this quarter, but that 7% depreciation that we saw in the quarter gone by as well. Given that the currency is a big tailwind for them, going forward in a Q1 of FY16 or in the first half of FY16, what would your own margin projections be? Do you think they can outpace this 15.8% margin?
See, there are a lot of factors regarding that. So if we have to see, the yen should really stabilize at the current levels for the margins for the company to deliver same kind of margins. So that is again that we have to see the level of yen. That depends on that factor. Also, a lot of other factors like the new launch expenses and the discounting per vehicle, which is prevalent at the industry level. So all that factors would have to be taken into account to arrive at the margin projections for FY16.
Okay, Bharat, we'll leave it at that. Any disclosures?
No, we are not. I myself am not holding any positions, but my clients, we may have recommended these to our clients.
Okay. Sonia, one final word on Maruti?
Oh, this is a very good set of numbers, Reema. More so because, you know, despite just having a 10% growth on the top line, they've managed to see a huge beat on the margin performance. So it's a 15.8% margin growth, which is a margin number, which is 500 basis points higher than what they did same time last year and much higher than what they did last quarter as well at 13.3%. Yes, there is the yen depreciation that has been factored in, but that could have been 100 basis points at max. Apart from that, it is the lower promotional expenses that the company speaks about which has helped them. So their own efforts which are also reaping benefits this time, and a 60% growth in the profits at 1,284 crores is much higher than what most of the street was expecting. Now the stock is up about 2.5%. If you look at it, it's been one of the best performing stocks this year. It's up almost 85%. And despite the valuations trading a bit expensive at about 20 times FY16 EPS, most analysts believe that given the currency tailwinds and given the whole host of new launches that they have, perhaps Maruti does deserve to trade at higher multiples, and that's the reason the stock as well is holding up quite well. So very good set of numbers, a beat on the margins and a beat on the profitability. We do have Prayesh Jain of IIFL with us to respond to the good set of Maruti numbers that we just got a while back. Prayesh, the margins this time have come in at 15.8%. So this is the highest we've seen in the last couple of years for Maruti. What would your own estimate be on whether this margin level is sustainable going ahead, and how would you react to the stock now?
This number is a real exceptional one for us. We were expecting a bump up in EBITDA margins, but like our estimate was somewhere in the vicinity of 13.5%. But this one is definitely big surprise, and I think a chunk of this could be from the currency benefits that would have come on the royalty payment that comes towards the end of the year. So in that sense, we'll have to see as to what is the portion of that, and definitely the raw material prices have also cooled off. Plus, important thing that has to be listened, that has to come from the management would be the discounting levels, whether they have started declining, and with the especially in the light that the contribution of CRs is increasing to their volumes, which is a no discount model. So in that sense, the discounts could also have played some role in this quarter. So that's the broad analysis of the margins for me.
So then, before we let you go, Prayesh, do you think these earnings justify a higher valuation to the stock, and would you change any of your earnings estimates in FY16 based on what you saw today?
Yeah, if in a quarter where you just see a 6% volume growth and you see a EBITDA margin expansion, such a large EBITDA margin expansion, and if these are for sustainable reasons, then definitely this calls for a earnings upgrade from here on, and the volume estimates will have to be toned down a bit, given that for a second half of FY15. Sees a similar H1 FY16, and monsoons would be a critical factor for Maruti, given that high proportion of rural sales. So that will have to be seen as to how monsoons pan out. We'll slightly lower our volume growth estimates, but margin could see some upsides, and that should even out, and earnings estimates staying steady or slightly on the higher side.
All right, thanks a lot, Prayesh, for joining us.